In this video, we're going to be talking about should you trade with prop firms? Should you trade with prop firms or should you trade with personal accounts? Let's get right into it. So the ultimate question that most people have is, should I go with a prop firm? Should I get a prop firm account? Or should I just fund my own personal account and just trade by myself? Which one should you do? At the end of this video, you're going to find out which is the best one for you to use, for you to go for at your current situation. So first of all, we need to understand what is a prop firm and what is a personal account. For those of you that don't know, for those of you that are new to prop firms are basically companies that give you money to trade with, right? So they act like investors. They give you a certain amount of capital to trade with, and then when you trade with the capital and you make profits, you and the prop firm split the profit. So the prop firm could take anywhere from 10% to 20%, 30%, while you as a trader, you take 80%, 70%, 80%, 90% of the profit that you make. So prop firms are trading companies that give you money with specific rules and guidelines to trade with and trade under. So you're going to trade under those rules and guidelines, right? While a personal account, which is what we all know, is trading your own money with full control. So basically you hustle, save some money, carry that money, put in your broker, deposit in your broker, and trade by yourself. You don't have anybody controlling you or anybody telling you, giving you guidelines or rules. You create the rules by yourself, right? So that's the difference between a prop firm and a personal account, right? So what do we need to know now? What we need to know is which one should you go with? And the reason why we need to know which one we should go with, because we're looking for one, the one that's going to make us the most money. Two, the one that's going to be suitable for our specific situation, because everyone has their own different situations, right? And then the third thing is which one is more sustainable and scalable. So we're looking for which one gives us the most money, which one suits our lifestyle, suits our personality, suits our specific situation, and which one is more sustainable and which one can be scalable. Scalability is key in every business. If you cannot scale your business, you cannot make more money, right? So let's get into it. So first of all, we need to know the differences between the prop firm account and the personal account, right? So I've given you a table here. We have the difference between the prop firm and the personal account. So let's go over it. So first of all, we have startup capital. Prop firm gives you low initial cost to access capital, while personal account gives you ability to trade your own capital, right? But we're gonna go over each difference here step by step. So I'm gonna guide you through each one. So first of all, let's go to the first one, startup capital and accessibility, right? So basically, with prop firms, you pay a certain amount of fee, a certain amount of money to get the account size that you want. For example, if you want to get a $5,000 account, you could pay anywhere from like $32, depending on the prop firm, like $32 to get a prop firm account, like a 5,000. This could give you a 5K account if you fund it next, right? If you want to get maybe a 10K account, that could be like $100 plus, right? So you pay a certain fee to get the account size that you want from the prop firm, right? But with a personal account, basically the amount of money that you have in your savings or the amount of money that you want to invest, that's the full amount of money that you're going to put, and that's going to be your full capital, right? But while with prop firms, the amount you put is what you use to get the capital that you need, right? So that's the major difference between prop firms and personal accounts, startup capital. So now, which one is better? So we're gonna go over which one is better and come to a conclusion and say, okay, should we go with prop firms or should we go with personal accounts? Which one favors us the most? So first of all, we have the capital, startup capital. This one gives you a low startup capital, while this one gives you need high startup capital basically with a real account in order for you to make significant amount of money or to make a consistent income for yourself. So with prop firms, you can get from a $5,000 account to a $300,000 account, right? $5,000 all the way up to $300,000. And with some other prop firms, you can get with like 400,000. I think with FTMO, you can get up to like $400,000 account sizes. And then you can also stack prop firms together. You can get 300K on FundingNext, 400K on FTMO. That's already like 700K, right? And then you can stack it up to like 1 million and then just trade with a trade copy and all those things. So this one gives you a huge amount of capital, right? With just a lower fee. So for example, this one you can pay like maybe $32 to get this. This one you might pay like $1,000 plus, right? So that's the amount you can use to get that. But with the personal accounts, I would say a good number to start with this. You're just starting out. Is a good number if you want to make good income from a personal account, I would say minimum $1,000 all the way up to $10,000 or more, right? The more money you have in your personal account, the more money you can make, right? With a $1,000 account, at least if you're risking 1%, 1% of that would be $10. So let's say you use a 1 to 2 risk reward. So each trade you make is going to give you like $20. So in a month, if you make 10%, all right, at least you've made $100 that month, right? $100 that month. That's from a $1,000 account. If you're risking 2%, so that month you've made $200 that month, right? That's if you can make up to 10% that month. So you can see that with personal accounts, you actually need a lot more money in order to make significant amount of income. Because, for example, let's say you have a $10,000 account and you make the same 10%, that's going to give you $1,000 per month, right? If you make 2%, if you're risking 2%, that means you've made 20%, that's going to give you $2,000 per month. So you can see the more capital you have, the more money you can make. And with a personal account, you need minimum $1,000 to $10,000 to make something significant, unless you want to be trying to double your accounts. Because if you're going to be trying to trade $100 accounts, they're going to need to take high risk. You can't be risking 1% there. You have to take like minimum 5% all the way up to like 10% to trade on that. If you have anything less than $100, then no more. That's even worse, right? So, but with the prop firm, that's same. Like for example, with the prop firm, $1,000 is going to give you something like $300,000 or more. Sorry, it's going to give you like $200,000 basically, from $200,000 all the way to up to $300,000. So plus $1,000, I think like 1.5. Can't remember the exact amount, but it's going to give you like a $300,000 account, right? And with a $300,000 account, if you pass the challenge, you know that 300K, even if you make 5% in a month, let's say you make 5% in a month, right? That's already 15. Is it 15,000? Because I think 10% is 30,000. So half of that would be $15,000. So you basically make $15,000 that month, right? On 5% of this. So you see how that makes sense, right? See how that makes sense. So already with a $300,000 account, you just made 5% that month, and that's already $15,000 in a month, right? So you can see, and the initial investment you had was $1,000 or more, right? Let's say for example, $1,000. You spend $1,000 to get a $300,000 account, and then you make 5% of that. That's already $15,000. But if you try to trade this $1,000 on a personal account, and you made that same 5%, all you would have had was $500, right? That all you'd have had is $500. So in this example, in this case, in this scenario, prop firm wins. So when it comes to capital, when it comes to startup capital, prop firm wins in this sense. All right. So let's move on to the next one, which is risk management. Sorry, risk and drawdown limits, right? When it comes to risk and drawdown limits, we know we have rules on the prop firm accounts, just like the rule that you have is the daily drawdown and the max drawdown, right? So those are strict rules that you have to follow when trading a prop firm account. While on a personal account, you don't have any rules. There's no external rules on risk. You risk how much you want, you trade when you want, you do whatever you want to do. It's your money. You're the one that fully funded your account. So you are the one that's gonna set the rules, basically. So on a prop firm account, you have strict rules that you have to follow, otherwise you lose the account. On a personal account, you don't have any rules. You set the rules by yourself. So prop firms have many rules which could be a stumbling block, right? One of the problems that most people have with prop firms is that they have a lot of rules, while some have some weird rules, which could be stumbling blocks in the sense that you don't have that much of freedom to operate, to trade as you would have liked. But with the personal accounts, you set your own rules. But the thing about this is that this could also be a stumbling block, because if you don't have rules place, if you don't have rule sets in place, then you could also still blow your account, because now you don't have any guidelines to follow. You don't have any rules set in place for you to follow. So you're now trading anyhow. It can lead to over trading, risking too much, over leveraging your account. So different things can come from not having rules. But the thing about this is, what makes this better is the fact that at least as you don't have rules, you can make your rules and you can make it suit your style and you can make it flexible. So basically, setting of rules is flexible. There's flexibility in setting of the rules. While on prop firms, the rules are rigid and you have to follow the rules. You can't be flexible with the rules. The rules that they set is the rules that you follow. While on personal accounts, you can set rules for yourself and you can be flexible with the rules. All right. So in this sense, I would say personal accounts wins in this sense. All right. So we have one win for prop firms, one win for personal accounts. Right. So the next one is profit potential. So what's the profit potential, right? Which one gives you the most profit in percentages? So on a prop firm account, when you trade and make profits, there's usually a profit split between you and the company. So you take from 70 to 90%, depending on the prop firm, 70% to 90% of the profits, while on a personal account, you get to keep 100% of the profit. So all the profit you make on a prop firm account, sorry, on a personal account, you keep all the profit, 100%. Right? So I'll say this one is quite straight to the point. Personal account wins here because who doesn't want to keep 100% of the profit, right? Although maybe the profits you could make here could be a lot more than on a personal account, depending on the size of your personal accounts. But nevertheless, when it comes to percentages, you keep 100% of the profits here. But here you don't keep 100% of the profit. So I would say personal accounts wins in that sense. So the next one, so we have one win for prop firms, two wins for personal accounts, right? So the next one is personal accounts has more pressure as you can lose everything, right? So when it comes to emotional and psychological pressure, prop firms have high pressure to follow rules. So you have to follow the rules, right? So you have a short window. That's a short window. You have a guide that you have to follow. If you break the rules, then you've lost the account. On the personal accounts, right? So wait, let me go back to this. So those rules basically can lead to pressure because the time you start taking losses and you're getting close to breaking the rule, you start to get emotional, and then that could apply pressure because now, okay, let's say you have 10% max drawdown, right? 10% max drawdown, and now you're down 6% on your accounts. You have only 4% left, right? Only 4% left. You're gonna be under pressure because you know that any small mistake that you make, you might just get to this 10% drawdown, right? And also when it comes to passing challenges, you have the pressure of trying to pass the challenge, and the deeper you go into drawdown, the harder it is to pass the challenge. So basically, if you're meant to make 10% on a profit challenge, and now you've lost 4% from starting balance, now you need to make 14%. Now you need to make 14%. So it makes it harder. Also applies pressure, right? To follow the rules. But with personal accounts, the reality that you can lose your own money, lose all the money that you have in that account can also cause emotions because now you don't have any rules set, or maybe let's say you have rules set, right? You have the ability to lose all your money, right? Maybe something happens. Maybe you place a trade, maybe you're trading news, for example. Let me just give an example now. Let's say you're trading news and then you have your stop loss in place, right? You have a stop loss in place, and then one high impact news happens, and then it skips your stop loss, right? Because that thing does happen. There are sometimes that news events skip your stop loss. So let's imagine news skips your stop loss, and then what happens after that? And you lose like 50% of your account. So if you had $1,000, you just lost $500. Now you have to make that $500 back, right? Or you could, let's say, worst case scenario, you even blow the account, right? So that could cause emotions because now you know that, okay, this is actual money that you're losing, right? And if you lose your money, if you lose all your money, if you blow your accounts, how do you fund your account again? How do you get the money to fund that account again, right? So I would say both of them applies pressure, right? So in reality, in trading, you're going to get emotional pressure, right? But the thing is that the profit account wins in this case because although you could blow the account, you could blow the profit account, you can still buy another account. So if you spend $32 to get a 5K account, if you blow these 5K accounts, you didn't lose $5,000. You lost only $32. You didn't lose 5,000. You lost only $32. And then you can get another $32 to try to get the 5K account again. Right. But on a personal account, we have $1,000 and you blow that $1,000, you have blown everything. You have lost $1,000. Right. Now you have to find another $1,000 try to trade and see if you can make this money back. But on a Profem account, if you spend $32, let's say you spend $32 two times, that's times two, right? So it's 32 times two. So let's say that's 64. You've spent $64 to get a Profem, and let's say you failed the two challenges, and then now you now pass on the third time, you pass the Profem account on the third time, and now you have access to a $5,000 account. What happens when you make 5 to 10% of this? 5% of this is what? 5% of this is going to give you about $250, right? So you're going to get about $250 on this minus, let's say it's a profit split of 80%. So you get 80% of the $250. That's going to give you $200. So now you've made $200 minus the $64 that you spent in those two trials of trying to get the accounts. That's going to give you 200 minus 64. That's going to give you $136 in profits, right? So you've just made $136, and then you still have the account. So the next month you can still make another money on top of that, right? So you can basically make the money back that you spent in getting the Profem account. I think there's one thing that some people do. They use the Profem as a form of risk to reward. So basically, how many times can it take you to pass the Profem account? So let's say you have $32. Let's say you have, let me give you an example here. Let's say you have $500 to spend, right? Let's say you have $500 to spend, right, on Profem accounts, and you decide and say, okay, out of this $500, I'm gonna try to pass this $5,000 account, right? So if you divide $500 into, if you divide it by $32, which is the amount to get the $5,000 account, that means you're gonna have to. That means this $500 can buy you a $5,000 account 15 times. So if you try 15 times to pass the account, let's say out of the 15 times that you tried, let's just say worst case scenario, out of the 15 times that you tried, you failed 14 times and then you passed one time, right? So if you fail 14 times, that's 32 times 14. That is, you just lost $448, right? You just lost $448. Now you passed the last time that you tried, you passed the account, and now you've gotten your payout out of the $5,000 account. And let's say you made 10% of the $5,000 account. So you made 10% of that. That's already $500, right? 80%, you get 80% of the $500. That's going to give you $400. So your overall loss basically is 400 minus 448. All right, so your overall loss is just only $48. So if you lost only $48, and then the next month you get another 5 to 10%, you've covered for the loss that you had, and now you're in profit. But with the personal accounts, if you have $500, right, and you blow these accounts, you've lost $500. How do you make it back? You have to try and get another $500 to try and trade and see if you can pass. If you can increase this to like 1,000, you have to double this. You have to get this to $1,000, right? Before you make the money back here. So if you blow the account 15 times, or let's say you blow the account 14 times, I don't even want to calculate how much you've lost, right? But let's move on to the next point. So in this example, in this scenario, Profems win. In this scenario, Profems win, right? So 2 wins for Profems, 2 wins for personal accounts. So now, growth opportunities. With the Profem account, you have instant access to large capital, right? So you can scale up. On the personal accounts, it's harder to scale up, right? It's harder to grow an account. It's very slow to grow an account, unless maybe you're taking high risk. You're risking maybe like from 5 to 10% per trade. That's the only way you can grow a small account fast. So on a Profem account, instant access to big capital, and you can scale this up faster. On a personal account, it's slower to grow your account, and it takes a lot of time to grow your account, basically. So in this example, in this scenario, I don't know why I keep saying example. In this scenario, Profems win. So that's basically the table there. So that's 3 for Profems, 2 for personal accounts. So Profems win overall in this table, right? So what's the conclusion then? So the conclusion now is which will make the most money, which will suit the specific situation, your specific situation, and which is more sustainable and scalable, right? So let's go over this. which will make the most money. But from the table, we've seen that prop firms will make you the most money, while personal accounts could make you the most money if you have a big capital, right? If you have a large amount of capital. And if you don't have a large amount of capital, for you to grow that account to give you a large amount of capital, it takes a long time, right? So in the long run, it's possible for a personal account to make most of the money, but in a shorter period of time, prop firms is going to make you the most money, right? In the short term. So which will suit your specific situation. Now, we have different situations. So the first one is if you don't have large capital, you don't have large capital, which most people don't. Most people don't. That's the reality. Most people don't have large capital to trade. Then go with prop firms, right? So if you don't have large capital, go with prop firms. That's what's gonna give you that amount of money at the start. I remember when I think that was 2021. The first time I made huge amount of money from trading was from prop firms. I made about $3,000 to $5,000 from prop firms, right? That was my first big cash out. That's from prop firms. So if you have large capital, let's say from $5,000 to $10,000 plus, I won't even recommend $1,000. I'll say from $5,000. If you're a type of person that doesn't take huge risk, you're a type of person that trades 1% to 2%, I'll say go with $5,000 minimum, because 1% or 2% on a $1,000 account, that's really like $10, $20, right? So in a month, you're just gonna make like $100. But with the $5,000, at least in a month, you're gonna make like $500, which is gonna be at least sustainable. So $5,000 all the way up to $10,000 on a personal account. If you don't have this amount of money, I recommend go with prop firms. Prop firms is gonna give you this amount of money, but with without you actually spending a lot of money, without you risking this amount of money, with like $32, $100, $200, $300, $500. I think on Funding $500 could give you a 100K account, right? So make 5% on this, on 100K, that's how much already? That's already like $5,000, right? So which is more sustainable and scalable? Prop firms are less sustainable. That's just the truth. Prop firms are less sustainable. The reason for that is because as we have many prop firms out there, prop firms come and go. Some prop firms last for long, some have been last, some like FundingX and FTMO, they have been around for a long time. I think FTMO is the oldest. FundingX has been around for like 3 years now, right? But we have new prop firms coming up and we have other prop firms going down. So I don't know if there are a lot of stories of people that have been with prop firms and then the prop firm crashed out. I remember the first time I made a big cash out from trading was from prop firms. The name of the prop firm was called Funding Talent. That was back in 2021. I made $1,000. They didn't pay me that $1,000 because they crashed. They went under. They went under basically. So they are not existent anymore. I think they died in ending of 2021. That's when they died. They were no longer available. All right, so they just crashed out. So that's why I say prop firms are not sustainable, because you don't know when the prop firm is going to go under, right? You don't know when it's going to go under. You don't know which one is going to last long. That's why it's recommended to go with the ones that have the good reputation and have been around for the longest, like FundingX and FTMO. But don't go with new prop firms, because those are the ones that are going to disappoint you, right? But the thing is, prop firms are not sustainable. They are less sustainable, but highly scalable. Highly scalable in the sense that you can stack prop firms on top each other. So you can, from a $5,000 account, you can build and say, okay, use the payout from 5K account and get to like a 50K account. Use the payout from 50K accounts, go to 100K accounts. From 100K, go to 300K, right? That's how you scale. You scale up with prop firms like that. Some people on a higher level, they scale prop firms at top prop firms in the sense that you might have max funding let's say on FTM, on FundingX, you have max funding here, 300K. Then you go to FundingX. Sorry, you go to FTMO. I have max funding there, 400K. So altogether like that, what do we have? We have 700K in funding. All right, 700K in funding, basically make 5% of that, or 10%. That's 70K or $35,000. Right. So it's highly scalable. But on personal accounts are more sustainable, but less. Sorry, personal accounts are highly scalable, but hard to scale up. Sorry, highly sustainable. Sorry, I meant to say sustainable here. Sustainable, right? They are highly sustainable, but hard to scale up. They're hard to scale up in the sense that you have a $1,000 account. It's very, very difficult to scale this up to $5,000 because that means you have to double this account like 2-3 times, right? Take it from 1,000 to 2,000, then from 2,000 to 4,000, right? It's hard to do that because if you're gonna do that, that means you can't really be withdrawing from that. You can't, because if you have $1,000, right? And let's say you made $500 that month. So now your account balance is now $1,500. Here's the thing. Are you going to keep that $500 in your account, or are you going to withdraw that money? If you're going to withdraw that money, then your account is going to go back to $1,000 and then you're going to start from scratch, right? So that's the thing about personal accounts. If you're going to be withdrawing the money, then it's hard for you to grow the account. It's hard for you to scale up. Unless maybe the reason why I say solely from trading is because if you're trying to grow it only from trading. One way that you can scale up your personal accounts is if you have money coming in from somewhere else. Maybe you have a business or you have a job, something is bringing in money. So that way, as you're making money from your personal accounts, you can be adding more money to increase the capital so that you make more money, right? But overall, it's harder to scale on a personal account, but it's more sustainable on a personal account because you have the account, you have full access to the accounts. It's not like the account is gonna go under unless you blow the account. Yeah, so which brings us to this. Now that we know that, okay, PropFM is the way to go if we don't have large capital, right? Which most people don't. So what is the best PropFM to go with in order to be sustainable? Which PropFM should you go with? I would say the best PropFM to go with would be FundingX. FundingX is the best PropFM right now, is the one that I'm using. It's one my students are using. And they have been in the game since 2022. So that is like 3 years now. They've been in the game. They have the fastest payouts. So with FundingX, you're gonna get up to $300,000 capital to trade with. You get up to 90% profit split, right? Very close to 100%, but you get 90%, up to 90% profit split. You get 24 hours payouts, right? 24 hours guaranteed payout, which I think they are one of the only PropFirms actually doing that right now, where they're going to pay you out in 24 hours when it's your payout day. And then no time limit. So no time limit on the challenges, right? So FundingX is the best one, is the one that you should go with, is the one I recommended for you. So if you want to get an account with FundingX, make sure to click the link in the description below. The link is going to be right there, the top link in the description below to get funded. Also, make sure to use my coupon code FNDanFX so that you get a 110% refund when you pass the challenge. Also, if you want to find and learn more, if you want to learn more on how PropFirms work, if you don't know how PropFirms work, you want to get an idea of how it works, you want step-by-step guide on how PropFirms work, make sure to watch this video on your screen, and then I'll see you guys.